Meet the Lot, native token of Lukki Exchange and the most potential tool for investing this year. Trade now on P2B, B2B and Lukki.io.
After our events business, I started Consensus, and some of you may have been in New York this year for Consensus again, our 5th edition. Very pleased about that. Before we begin, and we'll get intros from everyone shortly, just a quick level check here. How many people in the room own Bitcoin? Raise your hands. All right, that's 80%. How many own Ether? Ether owners? A bit lower, 60. How many own Cheese Wizards? Cheese Wizards owners? 1. All right, there you go. You're in early. Okay, so that's,
Sorry, guys, but it's the first rule of Bitcoin. Never say that you own Bitcoin.
Sure. It's actually 120% that owns Bitcoin in the room. With that in mind, let's do some quick intros. So in a tweet-length description, tell us what you do and what your company does.
Right. So Garrick Hileman, I'm the head of research at blockchain.com, one of the oldest cryptocurrency platforms in the world, 2011 created. Just added a stablecoin, the PAX stablecoin, to our platform. And it has two kind of differences to PAX on other platforms. It's got a hard peg, so a true one-to-one peg with US dollar, and no gas fees when you use it on blockchain.
Hi, I'm Marcus Riato. I'm chairman and co-founder of Parfin. We're building digital assets, prime broker services, focused on institutional clients, as well as launching a stablecoin, which we hope to be FCA regulated soon.
Hi, Simona Macellari. I work for Poseidon, but aims to build the infrastructure from moving from the traditional finance to the world of cryptocurrency. And now I'm the product owner of Econ. Econ is a stablecoin fully backed by gold in our Kavo.
Good morning. My name is Jennifer Sinhaji. I work on the business development team at MakerDAO. MakerDAO is the creator of the first decentralized stablecoin, the DAI credit system, and we're also known for being a pioneer in open governance.
Thank you, guys. So let's talk about a topic that is very buzzy at the moment when it comes to stablecoins, and that is Zuckbucks, right? And so Andreas mentioned this earlier as well. Facebook has something like 2.4, 2.5, give or take a few hundred million monthly active users. And we don't know this for sure, but it seems like the plan is they want to launch a stablecoin named Global Coin, right? And they'll even install ATMs around the world to allow people to move from fiat to this coin. So I guess my question to the panel is, imagine we're five years in the future, and many of these 2.5 billion people are transacting using Global Coin. What does that look like for the kind of the cryptocurrency stablecoin ecosystem?
Yeah, I mean, I personally think that Facebook's move into stablecoins is maybe one of the most significant events in the history of cryptocurrency. And it's going to easily enable potentially billions of people to start using digital currency. Now, is that a threat to things like Bitcoin? Personally, I don't think so. I think it actually becomes a lot easier when you onboard people into the digital currency world to then move amongst different digital currencies like Bitcoin, like other stablecoins as well. I think the key question is how much is the global coin going to be kind of in a walled garden within Facebook's universe? How interoperable is it going to be? Is it going to trade on other exchanges? There's still so many other unanswered questions about the structure of this. It's hard to speculate on what it's going to look like. I think one of the most exciting things it offers is, it's been rumored, is that Facebook employees are going to get paid or have the option to get paid in this stablecoin. That's one of the other kind of big barriers to global cryptocurrency adoption. Getting this beyond just being an investment to something we use more is actually getting people paid, for their work in cryptocurrency. That's to me, I think, one of the most exciting things about, what we've heard so far about global coin.
Maybe we should go to Jennifer here. Obviously, a global coin, well, we don't know the details, but Facebook will probably have a large say in how that's distributed, how that's regulated and used, and so on. What does that global coin future look like for someone like MakerDAO?
Yeah, I would say looking at it maybe in a 2-year horizon, because 5 years is quite a long time, and who knows what Facebook will be doing. But the idea of having this immediate switch to turn on access to 2.4 billion people who want to be able to send money in a different fashion digitally is very compelling. I think fundamentally, it'll boil down to how people view Facebook. Facebook, this large organization, that is going to be regulated and is very much tied to local jurisdictions across the globe, and those, legal environments. It will be interesting to see if that's going to make people more, nervous about using this and sending money and being able to have that financial detail tracked, while they're still, right now people are, becoming more and more, upset about just their basic privacy as a social media user and the way that their data is being sold to advertisers. So I think, it'll be more about the sentiment of the user experience. I think fundamentally having Facebook promoting the idea of a stablecoin is only helpful to all of us in the stablecoin space, because it's a point of validation. But looking long term, I think it'll be a question of how do people want their user experience to be? Is it more about putting the control back in their hands or giving more control to Facebook?
Simona, you must have thoughts on global coin, since you're working on a gold-backed stablecoin.
Okay, I have a different view. For me, global coin has not the characteristic of a crypto. I don't know if you remember what just said Andreas Antonopoulos. The protocol is not neutral, has not the characteristic to be a stable coin, because on the secondary market cannot bypass know your customer and anti-money laundering. What is global coin? To me, is the greatest competitors to PayPal. And PayPal, 30 years ago, tried to do the Internet of Money, was a failure. The US government forced them to be a payment system. And for me, global coin will be a payment system that will compete with other payment systems like PayPal, Vimeo, etc., is a bank at the end of the day, and will make banks' payment system much better because they have a competitive advantage. One, the narrative of crypto that is so sexy. Secondly, they have got the customers in their hands. So this is my view.
So really, it's a payment system competitor. Yeah.
Yeah,
Marcus.
I sort of agree because ultimately, first of all, it's going to be a private blockchain, right? I just read a news that there will be 100 nodes that will cost $10 million to run the node.
Cheaper than a Bitcoin mining farm.
Yeah, most likely, but again, the interoperability, as Garrett mentioned, the regulatory aspect will be very, very critical. And let's say you're producing or selling a good at Facebook, and someone buys with a coin, and this person needs to pay their employees, and how are they going to convert this into US dollars? So there's a lot of operational aspects to me that is very challenging. That's why I agree with Simona that the view of using as a payment system will be more than a coin per se. But again, who knows, right? Depends on the adoption.
Yeah, it really depends how integrated it is into the kind of the existing crypto economy, right? Like, where is it traded? And are people who are now using Tether, for example, going to start moving over to global coin instead when they're doing their trading? Which brings us neatly to Tether. We talk about stablecoins now. Stablecoins are kind of in vogue now, but really Tether has been around for a number of years and is used pretty widely, despite what some Twitter accounts may tell you. Possibly poses the single greatest systemic risk to the kind of the crypto markets, right? So I want to ask the panel, how do we get here? And what do you think we should be doing about it? Should we be, for example, demanding greater transparency from entities like Tether? I'll start with Garrick, maybe.
Right. Well, I mean, the fact that we're here, I think Tether, deserves a lot of credit for kind of putting stablecoins on the map and creating this space, really. I think what Tether's demonstrated is incredible resilience. Clearly, the market has still a lot of confidence in Tether, a lot of demand for Tether, in spite of all the issues. Some rumored, some more substantive and real. Tether is a big concern for regulators. It certainly is one of the things that is holding back the SEC from approving a Bitcoin ETF. That we know. And so why Tether is such a big part of the market, I think there's going to be regulators who are concerned with approving things like a Bitcoin ETF. At the same time, the market has not run away from Tether into these quote-unquote better Tethers. And there's probably some good reasons for that. Inertia, the network effect that Tether's achieved, it's clearly an important asset in this ecosystem, and it's probably not, barring some kind of catastrophic issue, going away anytime soon. So I think for those of us who are fans of crypto assets, we would hope that Tether would continue to become more transparent, more compliant, more or less of a problem, if you will, for those who are kind of holding back on approving things like Bitcoin ETFs that are really positive for the growth of crypto assets.
Simona, you're wearing a Bitcoin is dead T-shirt, and I feel like Tether is also like a little bit like that. Several near-death.
Very sarcastic.
Yeah, several near-death experiences. Yeah.
How I see the situation, I'm not really familiar with all the legal proceeding of Tether. Why we came to this case? Regulation. In excess, too many regulations made impossible to several exchanges, several operators to do their legal business. So they find a way. One way was Tether. This is the first answer if you ask after, do we need more regulation? No. We need a way to make people work. Second stuff, do we need audit? Yes, we do need audit, but which kind of audit? For example, I've got a stable coin, pair with $1. I have all my dollars in my banking account. Are we sure that my bank doesn't do fractional reserve? So if I want immediately the next day, I can have. Even if they do not do fractional reserve, are we sure that they do not change it in certificate, other stuff that if I want to sell the next day are liquid and have the same value? So this is the case, real cases. Is it a problem of Tether or Simona stablecoin, or is it a problem of the banking system, the old banking system? Sorry to be controversial, but this is reality of people operating in this market.
So you think Tether may be just a victim of outmoded banking and regulatory systems?
What I don't know if he's victim or did something. The only thing that I know is that it could be a systemic risk. For a few days there was a big shock, but we are back to the same valuation, and as a so-called stable coin makes around 90% of the market. So something is wrong. Either we are all stupid, or maybe there was bad information from regulators.
Marcos, you talk to a lot of crypto versus other stable coins. What's the utility out there in the market?
I believe, again, this year's crypto hedge funds are out of the Tether trading, especially to keep as a stable value on the digital space. We see more and more Paxos occupying a good trend, especially for the trading dynamics. I believe that there will be more transparency required for the institutional adoption, in the coming years. For instance, we believe that even it's possible today to do a daily audit or check through some mechanism we're creating. So that will bring more transparency, robustness to the market. And again, we have, we're seeing over the last months the adoption of institutional players, big ones, getting to the market with custody solutions like Fidelity, Goldman Sachs investing to BitGo, and those players will need to have a strong, stable value on the chain to be means of exchange on their trading aspects, on the upcoming security token space, because again, you need to, using fiat currency to buy a security token is inefficient, right? So you will need a stable value to be exchanged to that in a more efficient way.
So the issue is mitigating security risk by keeping fiat deposits on an exchange.
Yes, yes.
Sorry, just a quick follow-up. You said you were working on a solution that will allow kind of audits of stablecoins. How does that work? Can you tell us more about that?
So basically, we're structuring in a way that we're having a fund administrator to release daily NAVs of the underlying structure of the managed account, and that will list as an ISIN, so people will be able to check in Bloomberg, Reuters, and match with any chain explorer around the world. Obviously, we will build a clear match to show this transparency. And this, to me, is we're positioning ourselves as an institutional class stablecoin, because we believe there will be space to there, and again, I think the market deserves this. The market will evolve to more transparency, regulatory framework. Sorry, Andreas, if he hears me, but I think for the big adoption of the big players, that's the direction I would see.
Sorry, if I may ask you, I didn't get. If this is a sort of tether for institutional.
Yeah.
Okay. So why this will add more regulation, more transparency? Will be the same instruments with the same transparency, same regulation?
No, well, yeah, we can. I understand a little bit about Tether, but they had to raise 3 weeks ago $1 billion to cover their bank accounts because there was no money backing
Are
the
you
Tether.
sure of that?
Well, that was publicized in the news, right? Again.
Never. Bitcoin was dead 200 times, is still alive. So, I didn't read the legal proceeding in detail, and I do not have any share on Bitfinex, and I don't want to defend this stuff. But I want to understand the difference between Tether for retail and this other instrument, which is the difference in terms of transparency and regulation. Because to me are instruments to bypass the tough regulation of the biggest problem to retail investors like me. When I wanted to send money to Kraken in Europe, I couldn't, because I couldn't send my fiat money. So those are instruments to bypass this problem, which is the difference between institutional instruments and Tether.
So I'll pose this question to Jennifer, because you obviously have lots of retail users, and your job is talking to institutions as well, right?
Yeah, I think our perspective is a little different because building a decentralized stablecoin, the whole point was to kind of extend what Bitcoin started out to do, which is to create this global peer-to-peer digital currency, but making it a stable currency, solve for that volatility issue with Bitcoin. So, where there's transparency on a public blockchain, particularly with Ethereum, at any given moment, you can go on Etherscan and see how many DAI have been minted, what the amount of collateral backing all that is, which is currently Ether. And so you have this real-time, accessible, universal auditing audited ledger. And I think that's fundamentally the biggest difference between obviously fiat-backed stablecoins like Tether and kind of not having this, connection point to the banks and the flaws that, we came out of from 2008.
And if I may add, and after I shut up, it's very easy for exchanges to do proof of reserves in terms of Bitcoin. It's easy, it's transparent. Proof of fiat more difficult. This is the problem. The problem is fiat, it's not crypto.
And if you remember in 2013, 14, in the wake of Mt. Gox, for example, proof of reserves was seen as the big solution to this issue of auditability.
Yeah.
And now we're hearing similar calls for some of these, for exchanges and for stablecoin issuers like Tether. Do we think that is that the solution? Some kind of algorithmic proof of reserves thing?
Yeah, I mean, if Bitcoin, to use a baseball analogy, which is always dangerous outside of the United States, 9 innings, maybe Bitcoin and cryptocurrency in general is in the 3rd inning. Stablecoins, I would say, maybe are getting to the end of the 1st inning. Very early days. I think we're going to continue to see a lot of evolution. And really, the dream around stablecoins is something more trust minimized, more decentralized, that doesn't require using a counterparty and having to audit with traditional wetware, humans, auditors, lawyers, et cetera, right? It's going to maybe take a while till we get to that fully realized vision, but projects like MakerDAO are really leading in that regard, and I think that's really where hopefully this all goes. I think those of us who are passionate about cryptocurrency are here because it does offer the ability to have a trust minimized currency that doesn't rely on someone shaking a hand or promising something verbally, right? So these current stablecoins are not optimal, but they are a bridge that can help with a big problem that has hindered cryptocurrency adoption, which is volatility. Most people should not get paid their salary in Bitcoin, right? It's just too volatile. But a stablecoin could be a fiat currency killer around the world, a US dollar-backed stablecoin. That could kill or really compete with effectively a lot of the really bad currencies around the world. And that's, I think, pretty interesting.
I want to pose Simona's question to you and then to you, Marcos, as well. Do you think is there a retail stablecoin and an institutional stablecoin? And then a corollary is, do we think there'll be one stablecoin to rule them all in the future?
I mean, I think there's going to be many stablecoins for the foreseeable future, but all these exchanges issuing their own stablecoins, I think that something more independent is going to have a better long-term chance of gaining global coin, Facebook's currency, right? Something that's more independent is more likely to get adopted across different exchanges. I think institutions are going to require different, compliance and transparency or parameters than a retail user might. It's going to really depend on jurisdiction, location, denomination, and different fiat and so on. So there's room for lots of stablecoins in the short run. Longer term, it's harder to say.
Well, again, complementing what Garrick just said, you have currently a $4 billion market cap, right, of stablecoins. And going back to the reserves of fiat currencies on the exchange, nobody knows. If the market now is $230 billion of total crypto market capped, I imagine there minimum 10% of it in fiat money sitting on the exchange. We're talking about $20 billion spread in exchange on fiat currency. If you have strong stable coins, minimum this value will convert at a certain point because it will be easy to move the stable coin from exchange to exchange, being retail, not retail, or institutions. So I think there will be space for different stable coins. The market will evolve. And again, the way I see is and I met Paxos back in New York, Blockchain Week, and it was interesting because we're saying, we're launching a stable coin, looking for that, and they say, great, that's great that you're doing this. Again, there will be competition, but I think there will be space for the right structures. Liquidity is very important. Listening to the exchange is important, and again, being independent, I think reduces the conflict of interest of an exchange launching their own. So it's that's the direction I would see.
We have 3 minutes left. I want to ask the panel, what do we think are some use cases for stablecoins beyond kind of the trading use case, right? Maybe we'll start over there with Jennifer.
Yeah, well, right now we're seeing, predominantly these cases are within trading, and it's great because these are kind of building the financial pipes to extend onto other use cases. DAI is very much anchored into the DeFi space, and while that still is very much about trading, it does have larger kind of implications to helping people from other countries that would not typically have access to financial markets and be able to participate in, investing or lending or borrowing that institutional or just U.S.-based individuals could have. So the DeFi movement is really this, kind of universal access point to finance. So that is exciting. We're also seeing additionally more of social impact and nonprofit use cases where organizations are looking at stablecoins as a more efficient and transparent way to send money to, for disaster relief, and just having a better kind of record of where that money is going. We're also seeing just kind of the ecosystem of dApps, decentralized applications that are mimicking different consumer applications. Bike shares. There's a decentralized app that's based in Europe called Ride and Share, I believe, and these are geared toward more of the everyday use cases, and of course, merchants supporting cryptocurrencies for online purchases is also another growing area. So it's, in the last year, we've really seen the momentum building of adoption and just these, more distribution points and on-ramps to everyday activities.
Is there any data you can share around, for example, the payments use case, merchants using DAI, for example?
I don't have specific numbers. We just put out a pretty interesting blog about DAI stats, and we're growing our user rate at 20% per month. The real kind of barrier for merchants accepting DAI to date has been just the issue of paying gas fees. So when you're transacting in DAI, you have to, there's a gas fee that you always have to compensate for. So there's been more interesting kind of workarounds to that, where the merchants don't necessarily have to take, that financial hit. So I don't have specific stats, but I would say there is more because the ability to transact in DAI in particular has been improving. And that's really a reflection of just better building, better design from dApps and protocols.
Gotcha. Well, we're almost out of time, but so very quickly, use case beyond trading.
Okay, if I think of Econ, I see that is gold, stable coin based on gold. I see two things. Festival, a journey between traditional finance and the new world of finance. Second, I see, Paul was saying before, people that are outside the banking system. Those are the two main things that I see, and I would push.
Marcos.
I think, again, going back to the security token space, there will be the need to pay corporate actions, dividends, proceedings, using some sort of digital value, and a stablecoin, I think, is a very good use case for that, as well as to pay the issuers of a security token. Instead of paying using fiat currency, it will be exchanged from a security token to a stable value.
Mm-hmm.
Just briefly, so we published earlier this year a 140-page report on stablecoins, 2019 State of Stablecoins on Blockchain. You can read more about all the different use cases there, but I think for the time being, the key use case beyond trading is giving people around the world access to a digital dollar, a store of value that is superior to dozens of currencies around the world. That's the key thing, just like what Bitcoin offers in essence, but with less volatility. That's the killer app for the time being.
Well, thank you very much for joining me today on stage.
Thank you to you. Thank you for having us.